Hello everyone, welcome back to Midas Letter Live. This is your host Benjamin A. Smith filling in for the absent James West, who's currently on the West Coast. Today we have a special guest in studio. I'm here with MJardin Group's Rishi Gautam.
Thanks for having me.
Great. Now, MJardin is seeking to raise capital on a best efforts basis. Is that part of a raising capital structure, or is that part of something else like a reverse takeover to list on exchanges?
So MJardin is on a path right now to do an RTO. We've announced a potential merger with a shell called Sumter Diversified earlier this year. We've been planning our capital market strategy for quite some time now, since early last year, really to line the institutional shareholders and get a more sophisticated capital base prior to a public listing. So about 30% of our company right now is owned by Canadian institutions, large, long-only investors in businesses, as opposed to traders or short-term investors. So we have that set up already. We're in the path to a listing, filing the application with the CSE, getting our audits done, just like many of the other companies out there now. And this is a pre-RTO financing, where we're raising a small bit of money prior to going public. Okay,
are there any timelines or expectations of when your issue might come to market, or is that perhaps sometimes in the back half of 2019 or before?
It'll be this year. Barring unforeseen, it should be in the fall.
Okay, great.
Yeah.
Great. Now, reading over the company description, a lot of investors may not be fully aware of what your company does. You describe yourself as a turnkey cannabis cultivation, processing, and retail solutions provider, and also you help run facilities management. Now, perhaps you can narrow down the scope of what exactly your company does and how it makes money.
Sure. So our business, MJardin, was founded in 2014. The founders of our business have been in the legal cannabis space for about 10 years now. One of the founders went into the retail side and acquired a lot of retail licenses when it first went live in the state of Colorado. The other founder was a designer and manager of cannabis facilities. So we have one founder, James Lowe, who started the business as a management company, managing facilities on behalf of license holders, sort of a small niche management setup where he would get the design, do the planning, and ultimately manage the operations on behalf of a license holder. I came in as an investor in 2014, and we structured MJardin really as an institutional management company. We manage the assets, the cultivation, the processing, and the retail for a fee, just like a hotel manages a piece of real estate, calls it the Marriott or the W or some other brand. We're a hotel flag. So we come in with all of the know-how, the software, the people, the processes. Our licensed facilities have produced and sold over 100,000 kilos of product to date. So we have a huge depth of experience, and we're considered a management company first and foremost, not just a buyer of assets or a buyer of licenses. We know how to run these assets.
Okay, so that extends on the retail side as well, and
yes,
distribution of product, which I guess would be different than traditional property management company, for example, which manages the property. So this extends into advice, consultation, how to go to market with products. Does it sort of run the gamut?
Everything. So it's turnkey operations from seed to shelf, or from seed to sale, as they call it. We have started as a cultivation company in the beginning. We've acquired retail management companies as we've grown our business, and we think about the world as vertical integration. So we want to do the cultivation, the processing, and the retail, own those margins, own that distribution scheme, and that's how we pride ourselves. So it's turnkey, it's not consultative. We've done consulting agreements in the past. We've done turnkey management in the past. So we've started as an agent operating on behalf of license holders. Now we're morphing to principal. We're going to take ownership and run in the properties that we own ourselves.
Okay, that being the case, do you find it a challenge to stay focused on a particular aspect of the business with so many irons in the fire, so to speak, where you're sort of running, or help advising on the retail side, running properties, perhaps helping facility management and staffing concerns, or do you find the strategic focus of your company is somewhat challenging, given that all the different areas that you're sort of encompassed in?
Not at all. So we're turnkey operations. We don't do advice. We don't do consultations. We run the asset. So we have a portfolio of assets that we manage. We manage over 30 assets today across the US and Canada. We have an exclusive partnership with Growforce, which is our sister company based in Toronto. We manage all of Growforce's assets in Canada, and ultimately outside of North America as Growforce expands. So we're a manager of assets. Our portfolio is run by asset managers that run each and every asset. And as a owner and looking to buy certain properties, we have an acquisition team that goes and looks at certain licensed facilities, whether it's California or Nevada, and goes out and buys the assets that we want to own and operate. So it's just like a hotel company. We have a certain portfolio today, we're growing our portfolio through acquisitions, and we have a team to do the management and a team to do the scouting.
It's kind of like a REIT in a way.
Better margins.
Better margins.
Yeah.
That's good to hear.
Yeah.
Now, in this late December, you announced a private placement financing for about $20 million US.
Correct.
Now, where did that money go to, and is that cash balance still on the books, or has that been deployed elsewhere?
So in January of last year, we started our march towards two main initiatives. The first one was morphing our business from agent, again, managing property for others, to principal, managing properties we want to own. So through that evolution, we wanted to obviously tap the capital markets, and we wanted to make sure that we weren't just doing an RTO or rushing to get listing just to be a public company. We were taking a lot of thought, a lot of preparation, and respecting the process of being a public entity. So that $20 million raise we did last year was in partnership with a firm called Kes7 Capital, based here in Toronto. They're a merchant bank that helped us get Canadian institutional investors in our business. So that private placement was led by Kes. The dominating investor in that capital raise was institutions based in Canada. So we diversified our shareholder base outside of the US with Canadian shareholders. And we used that capital to acquire retail management. So prior to that raise, we have cultivation and processing management and expertise. We bought the retail side of that. So it was an acquisition that gave us the full vertical integration, cultivation, processing, and retail. And that management company is now combined into MJardin, and we're going forward with future acquisitions where we're looking at retail, extraction, and cultivation assets.
Okay, so I'd imagine if the U.S. ever fully legalizes cannabis and deschedules cannabis as a federally illegal narcotic, that would just open up different markets, further markets to you in terms of being able to acquire assets that are attractive and that could be accretive to your balance sheet?
Absolutely, and the markets are open now. There's some very fragmented markets today. That presents a great opportunity for an operator or someone with operational experience and capital to go into various states where you have single store locations or maybe a collection of multi-store owned businesses.
Yeah.
They don't have the substantive infrastructure, they don't have the compliance, they don't have the bandwidth to expand as a business. We can come in with our background, that hotel management concept, and come in and either they're partners with us or we buy them out completely, and we can now take over those assets. And it's a great opportunity for us because the market's so fragmented. There's a number of different opportunities to get assets that are valued much lower than some of the public companies that are valued today.
Right. Well, it's funny that you mentioned that because the Midas letter, we talked about how the California market in particular is very fragmented in terms of, you have dozens of different operators, you have people not in compliance all over the place. There's no real dominant entity there.
Right.
Now, is the California market something that you've already pursued, or is it something that, if you haven't, is it something that you look to pursue more going forward?
So we've have experience in over 13 US states as a consultant or as a manager of assets. Now, as we're morphing from agent to principal and looking at owned operations, we're looking at a number of opportunities in California, Nevada, Arizona, and also on the East Coast, where we can come in as an owner-operator. California has been a state where we have experience consulting a few of the license holders. We've taken a step back and have a cautionary approach to certain assets we want to take ownership of, but we're actively looking at a number of opportunities, not just in California, but other states that are up and running, state-regulated, existing market today where we want to be an owner of assets.
Okay, terrific. Well, I think at this point we're going to leave it there. Midas Letter is going to obviously follow the story, and when you get on market, we'll be following the story through and through.
Okay, thanks for having me.